Our Squawk Reserve joins us right now with a preview of what we can expect. We have former president of the Dallas Federal Reserve, Bob McTeer, also former Federal Reserve Board Governor Mark Olson. And gentlemen, welcome to both of you. This is a big, big day. Bob, did you think you'd see this day where the chairman actually starts taking a press conference after the FOMC decision?
Well, I guess that's where the trend lines were headed, but it did come as a surprise when it was announced.
And today, do you think that we'll see the chairman making news or trying to avoid making news?
Well, what I think of is how much time inside the meetings goes toward getting every word in the statement exactly right. And then he's going to go out there and they're going to be pulling him in all different directions. And it's he'll do as good a job as is possible, but it'll pull him off script just a little bit. And the outcome of that is uncertain.
Yeah, Bob, you sound a little unsure that this is a great idea.
Well, I've always dragged my feet a little bit on transparency. I think a little bit of flexibility that is a good thing, and the Fed gives up flexibility as it becomes more and more transparent.
Mark, how about you? Did you think this was a good idea, and what are you expecting to hear today?
I do think it's a good idea, Becky, and I also think, as Bob said, it's part of a progression. Unlike what we heard earlier in this program, the progression of transparency did not start with Steve Leisman. It started actually a decade before that, when they first announced the target rate, and then they announced how the voting took place, and they announced the voting the same day. And there has been a progression. It seems to me that this is the next logical step. And I like Bob. I am an incrementalist when it comes to that, but it is the next logical step. But I also think that Chairman Bernanke indicated he signaled that this would come back at Jackson Hole when he said that the two next steps we can look at, number one, is more easing, essentially moving to the QE2, and point number two that we can get is change the manner in which we communicate. And the risk that he said at that point was that the manner in which we unwind may confuse the market. So I suspect, based on what he has said earlier, that part of what he will be doing is to try to set the stage for the unwinding.
Well, actually, Mark, that would be something that the markets could certainly be moved by. If you start hearing about whether they're going to get rid of some of the items they have on their balance sheet first, if rates are going to be raised first, you expect that we'll hear some sort of orderly progression, maybe not a timing of exactly when, but what they plan to do first?
Well, there's a difference, Becky, I think, between moving the markets and surprising the markets. Moving the markets is okay, I think, to the extent that it brings the markets relatively in line with what the Fed perceives as being the logical reaction. However, surprising the markets would be bad. But I do think that there may be some sense that it would be a relatively long term. But in terms of what the immediate decision will be, I think that the first thing we will look at is if they change the word with the wording of exceptionally low for an extended period, and I don't anticipate that we're going to see that wording change today.
Meaning we're not going to get any clarity when it comes to what comes next. Maybe we know that QE2 will end in June as expected, but there's all these questions still about QE2 light in terms of keeping the balance sheet where it is?
I think that we will keep the balance sheet. I think that the verbs here are critical. It will have been completed as opposed to stopped. And so at this point, then the next thing will be at what point and over what period of time will we be moving back to a normal balance sheet? And I suspect that will be a number of years, but I don't think we're going to get any specifics on that today.
And Bob, I guess you're very concerned about the market being surprised, just as market said would be a bad thing. Maybe moving the market, not so bad, but surprising the market, trying to tiptoe around those words that have been finessed so carefully?
Well, it does pull apart all that delicate work that went on. But let me say on the unwinding that that really isn't to be determined by the Fed. That's going to be determined by how the banks start using their excess reserves. As long as they're sitting on all those excess reserves, it's not a good idea to do any unwinding. But as they use them more aggressively and the money supply starts growing too rapidly, then the Fed has got to withdraw enough reserves to offset that expansion in the multiplier.
Well, Bob, is that an argument for raising rates before you unwind the balance sheet?
I would suggest that ought to be the priority. I think that rates have been zero for way too long, and that moving them up to a half a percentage point or a quarter or 3/4 of a percentage point would be a good move and should have a higher priority, I think, than the priorities they're given. That's why I hope today they will remove that extended period language, because that means that they can't do what they should do until they remove that language.
Mark, one question that may not get answered today is what role the Fed has played in terms of weakening the dollar. What role has it played?
Well, I think that there's no question there's been a correlation between QE2 and the dollar's decline, but I think that there was a sense that this was anticipated. Now, what you won't see that the Fed do, I don't think to any extent whatsoever, is to target where they think that the dollar should be vis-a-vis any of the other currencies. To the extent that that's anybody's job in the federal government, it's the job of the Treasury Secretary, and I think that you'll see the Chairman Bernanke avoid that pretty assiduously.
All right, Mark and Bob, thank you very much for your time today. We appreciate it. We'll see you both again back here very soon.